The following is a presentation of TFNN. Live at TFNN, the Small Cap Roundup, with your host, Kate Stalter. Now, Kate Stalter.
Good morning out there. As always, greeting you here from 7,000 feet. Well, not as always. I guess every once in a while. I've done a couple shows from closer to sea level, but not today. Up here at 7,000 feet today. And kind of surveying the view of what's going on in IPO land. As usual, the news today is all about the Facebook director who is unloading his share in the company, and that had been prearranged prior to the IPO that he would exit at this point, but nonetheless, it's still just getting a ton of media attention because everybody likes to talk about Facebook. So there you have it. You know, the other news we have today, and let me just for fun, I'll put up a Facebook chart. We can just take a look at that real quickly before we move on here. Yeah, still a cellar dweller. Let's take a look at it here on a weekly chart. And, you know, this stock is a long way away from being something that an investor or even a longer-term trader would want to attempt to get into. So this is just not something interesting to me. Here's another one that I've talked about a little bit. This company reported, Best Buy. I don't think I talked about this on here. I think I talked about this on Facebook. Sometimes it's hard to remember which different media outlets I've been discussing what topics. I'm pretty sure this was on Facebook that I talked about Best Buy. You know, I had to go in there the other day because I had to pick up quickly a new power cord for my MacBook Air. And yeah, you know, the whole idea that an Apple product died, that's a whole different rant. Apple is not as perfect as people like to think in terms of the products, but that's a different rant. But nonetheless, I had to get a new power cord. I needed it right away, could not wait to order it online. And I did run into Best Buy. You know, here's one of the reasons why customers are staying away from this company. You know, everybody's talking about the fact, well, is it an Amazon showroom? Is this just the kind of thing that other retailers are eating its lunch? For example, if you need a big screen TV, you can go to Costco or Sam's Club, even Walmart. These days, there's other places to get some of this stuff, potentially at better prices. So, you know, there's a lot of theories out there that people are positing as to why Best Buy is suffering. But I've got my own little theory that I experienced just the other day when I just had to pop in there and get this power cord. The greeter at the door, I went in there, I guess it was kind of a slower time of day, and I wouldn't be surprised if this store is one they close anyway, because it's in a smaller city, presumably fairly low traffic. It's definitely not as highly trafficked as the one I used to go to back in Culver City, California. But I went in there, the guy at the door greeted me, I told him I needed an Apple cord. He walked me to the Apple department. As he walked me over there, he was trying to sell me whatever satellite TV they sell. I don't even know what it is. Is it Dish? Could be. You know, I'm not going to get Dish because they have dropped AMC, and I do like to watch Mad Men and Breaking Bad, so that's not going to happen. But nonetheless, I don't care. It doesn't matter what they were selling me. You don't walk me to the Apple department trying to sell me some other random product, harassing me about it as we walk, and under the guise of asking little questions like, hey, can I ask you a question? That's kind of how he did it. Can I ask you a question? And, you know, what a turnoff. So I think this is kind of what happens as they've become more desperate. They've resorted to more and more tactics like this, having the guy who greets you at the door who's harassing you about some product you didn't come into. That's not a good thing. That's not something that customers are going to want to return and experience that. So I think it's just sort of a move that's coming out of the company's desperation. You know, kind of you picture them as little cornered animals who are lashing out, and that's kind of what's happening there. So, you know, it's already the fact that you can't buy something in there without being harassed for 10-year warranties or something, which, of course, you should never purchase any of these extended warranties. I do know for a fact that their commission is based on a lot of these. That's how the salespeople are compensated, is by selling these garbage warranties. So, yeah, so it's the harassment store, the company harassment store, and that's one of my theories as to why this thing is tanking. It is just not a good customer experience when you walk in there. So there you go. It's one of my many reasons. That kind of thing is fixable. So what I wanted to do today, let's move on to a happier topic. I'm always looking at IPOs to see how the newer companies are performing, what companies are filing. So let's see here. I wanted to show you one we looked at last Thursday. And this is, it's kind of got a funny name. It's a fracking company, HCLP, High Crush Partners. And what this company does is they do produce a lot of the sand used in the fracking process. Let's see here. Went public at 17 just a few days ago. This was Thursday when we were last on the air here with the Small Cap Show. Went public at 17, is now trading at about 19.52. So a little boost there. Post-IPO for High Crush Partners. It's based in Texas. You can't really tell anything about the volume thus far because it gets outstanding trading volume on the IPO. No kidding. That's when you're going to see all this coming in. So we don't have any real meaningful volume statistics yet. So that's one that just went public. Let's take a look just for fun at the high-profile one that everybody was kind of going a little crazy about last week. Manchester United went public at 14, is now trading at 13.21, got a big boost in the opening day. Well, let's see. Yeah, went public at 14. Not such a big boost, really. Went public, got a boost up to $14.20 in its opening day of trading. Actually, then the second day of trade, let's see here, that was the 14th. So this has been out for a couple of weeks. Rose as high as 15.27, now trading at 13.21. So, you know, again, it's sort of one of those things where almost with these IPOs, the bigger the hype, the worse lately they seem to do. And obviously that is not any kind of scientific or quantitative analysis there, just really anecdotal. Just looking at the amount of hype that goes into some of these IPOs. You know, now, is it a little too soon to say, same with Facebook on Manchester United, how this thing is going to do? Yeah, it is. But, you know, come on. I mean, this is a sports team. You're not going to have that kind of potential scalability and growth that you might have with something even like a Facebook. I mean, it's easier to see the growth potential in a Facebook, for me, frankly, than it is in a Manchester United. So that's what you've got there on that particular stock. So let's see here. Wanted to look at a couple others that are in the pipeline. And just a reminder, I'm not going to have charts on these because we're going to talk about some pre-IPO companies here. So while we're doing that, I will leave the IWM chart up here, the Russell 2000. And by the way, this is not one of those ETFs that is run by Russell, that Russell is going to close. They announced they're closing a number of their ETFs. The IWM is not included in that particular announcement. This is something that is run by iShares, not directly by Russell. It's run by iShares, and it is pegged to the index. So, all right, so let's take a look here. I believe I mentioned this the other day. We have Pfizer's animal health care unit, Zoetis, Z-O-E-T, and we have the Mexican arm of Banco Santander has filed to go public. BSMX, I believe, will be the ticker on that one. Plans to be dual listed in the U.S. and Mexico. The company may raise as much as $4 billion. I talked about the nutritional supplement maker last week, Visalis, VSLS. I was watching CNBC, and Herb Greenberg, I think, on there does a good job of kind of just questioning a lot of the value propositions of a lot of these. Now, I can personally see the point of unlocking some value. It's owned by Blythe, and let me just put up the ticker there. BTH is the ticker. Blythe is a small cap company that is involved in the home decor business, candles. I mean, you don't really think of candles and home decor as big growth industries. Blythe has a market cap of $770 million, very small. Its volume just spiked, so now it's got an average volume of 220,000 shares a day. Was smaller than that previously. Analysts expect $1.45 per share earnings in 2012, so that would be a 25% decline. You know, this is something, it's a Connecticut-based company. This has been around for a while. I've seen this company over the years come and go on some of the growth screens, but really, frankly, it's pretty small, does not necessarily show up on my scans, because I'm looking for something that has better liquidity than that, maybe about 300,000 shares or so a day. I can personally see the value in unlocking a company like Visalis, nutritional supplements. It is one of those direct marketing companies. What do they call those? There's a name for them. But you know the kind I'm talking about, where people go out there and refer their friends, and their friends come in, and they also become marketers, and it's really a recruitment company. But nonetheless, if you do have the underlying product there of the nutritional supplements, the diet drinks, kind of geared towards that fitness marketplace, you do have something there that, frankly, is a better growth prospect than something like the candle business. So it does make sense, although multi-level marketing, that's the phrase I was looking for, and that's where Herb Greenberg was questioning sort of the sustainability of the growth in multi-level marketing. I can understand that criticism, but by the same token, I understand the need to unlock some value by spinning out Visalis. So that's filed for its IPO. So that's a couple there. When we come back, we'll look at some more recent filings and some more recent IPOs and take a look at some of the new companies that are doing well. I'm Kate Stalter. This is the Small Cap Roundup.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Okay, we are back taking a look at some more IPOs. By the way, wanted to remind you, we still got our free IPO report up there on the homepage of TFNN.com. So you want to take a look at that one. 7 recent IPOs. We'll take a look maybe at some of those charts today to show you how they're acting. And for those of you who have not read the report or are new to the show, I'm never talking about jumping into an IPO on its first day of trade, never talking about trying to get into one of these at the earliest possible moment, because the reason being, it's very, very typical for them to get an opening pop. Maybe it even lasts as much as a few weeks on some kind of successful IPO. High Crush is looking pretty good right now that we just saw. But what I'm talking about is watching. Give it a little time to establish a trading pattern. Give it a little bit of time to establish some volume trends, some price ranges. Let the institutions and the insiders kind of get past some of these lockups. In other words, give the thing a little bit of time to establish itself as a publicly traded company. And this could be a few months down the road, could offer you a good opportunity to get in. And when I say IPOs, I'm even talking about things that have been trading for a few years. Obviously, not something that's well established. We're not talking about a Microsoft or a Procter & Gamble or something of that nature. We're talking about something that maybe has made its debut within the past 10 years or so. What I focused on in the IPO report that we have for you up there on tfnn.com, what I focused on in there was stocks that have made their debuts in 2011 and 2012. I think most of them were from 2011, as a matter of fact, so they have had that requisite time to establish some trading character. Okay, so let's see here. I do want to take this opportunity today to just look at a few. We've got some interesting things going on. Few others I'm going to leave. Actually, you know what? I'm going to talk about some more pre-IPO companies, but I'm going to put a Zillow chart up there right now because Zillow is one that went public not all that long ago. Zillow made its debut in July 2011, so a little over a year ago. And let's see there. You can't really tell on a daily chart. This goes back to, actually you can. If you look at the very far left of your screen over here, you can see how this got a pop after it made its public debut. Has never really attained those early highs again. It rose as high as 60. But nonetheless, don't forget, that's where you get the investment banks and the institutions propping up shares at the very beginning there. You also often, with these newer issues, you have the situation where, you know, you've got the float is very carefully monitored these days. You have a very low float, so you know a lot of what I want to say the word manipulation, because that's what it is. There's nothing illegal here going on with these, but you do have a lot of machinations, is maybe the word to use. Just a lot of the Wall Street trickery that is used to get these things launched, to make the money for the institutions, to make some money for the insiders. And that's what you see. So you have here, so Zillow's doing okay. It's getting some support. Let's pull this up here on a daily chart for you. So you can see there getting some support around its 50-day moving average. You did see a year-over-year earnings decline recently, but a lot of growth expected in this company in the next couple of years. It's expected to earn 32 cents a share for 2012, so that's triple, actually more than triple what it earned in 2011. Expecting that to more than double again to 70 cents a share in 2013. So a lot of, you know, as consumers, we get on there, we can get the data for free, but there are ways that this company is monetizing the data for mortgage brokers, for the professional real estate industry. So pretty interesting model there. Now there's another company. I'm going to leave the Zillow chart up there because I'm going to talk about Trulia for a moment. And some of you may know that website. That one is another real estate company, pretty similar to Zillow. They filed to go public. They want to raise $75 million. So we'll see how that pans out. All right, we'll come back, take a break here. We'll have the European close after this next break. Hey, give a call. I'm at 877-927-6648. We can talk about some of these charts that you would like to see today. Be right back.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Tom O'Brien's daily trading newsletter, Market Insights, has delivered powerful results for subscribers, and now is the perfect time to try it out for 2 weeks absolutely free. We're so confident in the value Tom provides his subscribers in his daily newsletter that through Labor Day weekend only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, completely free of charge. Will even cover the shipping cost. Cancel at any time during your 2-week free trial to Market Insights and pay nothing, and keep Tom's free book as a gift from us. This offer is only valid for new subscribers. We've only extended this offer once before, and it will only be active for a short period of 2 weeks. So act now to take advantage of this great offer and be ready to capitalize on a more active, more volatile market once traders return from their August vacations. All the details are on the front page of TFNN.com. Sign up for your free trial to get your free copy of Tom's best-selling book today. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Welcome back to the Tuesday edition of the Small Cap Roundup. Just a couple quick reminders. I was talking about the special report on the IPOs on the homepage, tfnn.com. Make sure to check that out. Download that. It's free. Also, I want to let everybody know to take the opportunity to get in on the Small Cap Roundup, not only the show, but also our newsletter, Low Price Leaders, which is still available at the introductory rate. Once again, you can get information about that on the homepage of tfnn.com. So I want to point you in that direction. What we do in there is take a look at the stocks with a market cap of under about $2 billion. I'm looking for some decent liquidity, about 300,000 shares or so a day. I'm not typically looking at some of these more thinly traded stocks. Sometimes I will include some of those in the newsletter. I run a whole lot of different screens, and sometimes there will be a name that will come up from something other than my top most, I have a small cap screen that really has some very tight parameters. That's what I typically use to share with you ideas on the newsletter. And tell you something, we've got some really good trades on right now. We've got one that was up more than 20% from the time we made the purchase. We've got another one that's up nearly that amount, so and a third one that's been doing very well. So what we're doing here is looking at the small cap names with the best potential. A lot of these do tend to be fairly recent IPOs. So that's another screen that I run on a very regular basis, the IPO screen. You know, you get a lot of mid caps in there as well, and I'm happy to share those ideas with you here on the show, because a lot of them are names you might not necessarily hear too much about in the mainstream media. So this is a good place we can talk about some of these newer names that are not the behemoths, something like a Facebook that you're going to hear a whole lot about. And we'll talk about some of those here in just a few minutes. So that's something we do there. Also, I look at low price names priced between $5 and $12. Don't want to create the impression that these are penny stocks. When we say low price, they are not. In the universe I'm screening for, $5 to $12 is low price. And again, we use some pretty tight parameters in here. We're not trying to give you anything that's junk. We want to give you the highest quality stocks that are attracting the attention of some of the institutions. By that, I mean some of the mutual funds that do trade in some of these lower priced and smaller cap names. There are some very good funds that do invest in some of these, and we want to point these out to you. And don't forget that $5 to $12 level can often be a springboard for much more gains. So this is what we are doing in the newsletter. I urge you to check that out. If you have not yet, you can take a free trial and also get in on the introductory rate before that goes up. It's still a pretty new newsletter. Okay, so I was talking before the break about some of the IPOs. We've got, I put up there a chart of Zillow that went public last year. And I was talking about Trulia. Another one that's filed recently is Safety Clean. It's going to be, let's see, while we're no chart for this, so I'll put back the IWM. Still seeing some gains in there today. So one is Safety Clean. The ticker on that will be SK. Now, this is a waste management company. They are reportedly hoping to raise about $400 million this time around. This had attempted to go public back in 2008. I don't know when in 2008 from what I'm reading here, but now that's not terribly surprising, is it, that something, a company would have canceled its IPO back in 2008. And they're looking at some of these improved market conditions right now and hoping to go public again. So they've refiled. Another biotech, Regulus Therapeutics, RGLS. And this will be one of these small names hoping to raise $58 million in an IPO. This is a company that focuses on developing drugs that target microRNA. So there are so many of these specialized little biotechs out there. And of course, as we well know, many of them they go public to raise some more money to conduct their research and development. In many of these cases, the ultimate goal is to be acquired. This company is part owned by Isis Pharmaceuticals, Allen Lamb Pharmaceuticals, so they are almost 100% owners, pretty close. So telling you this is going to be a pretty small float. Isis owns 45%, Allen Lamb, however you pronounce that, owns 44%. A lot of academic collaboration, so research and development being conducted at some of the universities, and some of the backers of the research are AstraZeneca and Biogen Idec. So, right, I think the word acquisition target is written all over this particular company. They're planning to raise $58 million. I said that. $14 million in sales for the 12 months ended in June. They want to list on the NASDAQ under the symbol RGLS. Lazard, Cowen, BMO are the underwriters. So that's all we know on that right now. They have not issued any information about where they are hoping to price that stock. But there you go. There's a look at some IPOs in the pipeline. So maybe some stocks we'll be looking at in the coming weeks and months. So I was talking a moment ago about looking at some of these mid caps perhaps, and small caps as well, that are among some of the best performers from the ranks of recent IPOs. Here's one that I talk about a lot. It's a mid cap. I talk about it a lot because it's a great performing stock. This is Michael Kors, the luxury goods retailer, market cap of just about $10 billion. Terrific volume, nearly 4 million shares a day traded on average. You see it there on a weekly chart, made a huge leap following its earnings report. I like what it's doing right now. It's just kind of holding on right there, right in the range. You want to see it keeping its gains. Let's put this back over here onto a daily chart. So there you see, just pulling back slightly, but for all intents and purposes, I'm going to call that holding its gains. Very, very normal, just to see a little bit of profit taking. You see a lot of stocks that jump higher on some kind of earnings report, good news happening, analyst upgrades, and then it's very common to see a little bit of selling, and that can frequently offer you a little bit of a buy opportunity as it pulls back and consolidates. I'm just taking a look. This one is right now a little bit extended, not attempting to enter this one as of now. It's about 2.8% above its 5-day line. So this is one that you might want to wait a little bit and see how this consolidation takes shape. I'd like to see it get some support above that 5-day moving average. Obviously, that 15-day line is also going to move higher. As that happens, if the stock does pull back, getting support above that 15-day moving average, that could also be an opportunity for an entry point. So this is one to watch right now. Really liking it. And let's talk about the estimates here. 60% earnings growth expected in fiscal 2013. Another 26% expected in fiscal 2014. So, you know, this is just one of these. There's so many of these situations out there where you see companies where people are spending the money. I know we're in the era of doom and gloom, and an election year, frankly, tends to make it worse with all the doom and gloom talk, but you do have companies out there where people are spending the money. I think, too, some of Michael Kors' celebrity has something to do with the fact, no kidding, that this company is also doing well. Not only is he a known designer, but he is a regular on a very popular television show, Project Runway, so there you have it. Okay, want to take a look at a couple other fairly recent IPOs that I have been tracking. Here's one. I talked about this one on the show before, but that's okay. No problem talking about the same stocks if they are some of the ones worth watching. Now, this is Ellie Mae. It's pulling back. I know that there was, we had the news yesterday about Lowe's, and there was all that initial news that was going on out there about more optimism in the housing sector. And frankly, I haven't really been following the day-to-day news on this particular stock. But I was tracking that there was a pretty big pullback on this particular one yesterday. It originally got support at the 15-day line, now is falling below that. On a daily, it looks pretty precipitous there. Now, let's see here. I'm going to put this up here on a weekly chart for you. And a lot of times, you get a little better perspective if you do look at something on a weekly. This one has, well, the beta is 1.05, so not really that unusually high. But it is a new stock, went public at $6 a share back in April of 2011. As of now, it's trading at about 24, so terrific rise that you see right there in this stock. Interesting to see how this continues to trade relative to that 50-day moving average. Let's go back over here to a daily chart. Take a look at Ellie on the 50-day. Oh, by the way, this is an electronic mortgage origination company. So that's why I was talking about the sentiment regarding the housing sector. Has a market cap of about $606 million, liquidity of about 516,000 shares a day traded on average. So this remains one to watch. I did not have this one as a holding. I can tell you that if I had, I would have gotten out of this. Let me see here. I'll tell you when I would have gone. I would have gotten out of this yesterday. Is when I would have exited this stock if I had this one as a holding. Because prior to that, it was looking pretty good. So let's just see. I don't, with my methodology of trading, you want to get out of these things, but it's also the kind of thing that I would keep an eye on to see when it might offer the next entry point just based on its trading history. Okay. Let's take a look at a couple more here from the recent IPO category. Here's kind of a related name. This is a stock that has been a holding in the past in the low price leaders. It is not currently a holding. Okay, it's something I'm just watching at this time. It is called Nation Star Mortgage. They are what they call a non-bank residential mortgage service. And I do know, and what that translates to is they're a mortgage provider, not a bank. The stock went public at $14 a share in March of this year. So this is something that's very new. You can even see there on a daily chart how it's had a nice run up. Let's put this up here on Tiger TV on a weekly, and you can take a look. And a weekly gives you a terrific perspective on how Nation Star Mortgage has performed. We did very well in this one as a low price leaders holding. And this, by the way, I would not have considered a low price name. This was a small cap name at the time. This has ventured into kind of that borderline area between mid cap and small cap. It's got a market cap of about $2.5 billion. I know that the Russell 2000, the S&P 600, they consider a small cap as a stock that has a market cap of $3 billion or less. So by that standard, this would meet their criteria. Volume of about 823,000 shares a day, so not so bad. So what you have here is a stock that after rallying to... It actually rallied to an all-time high only a few sessions ago, last Friday, 28.75, reversed that same day, is now about 0.2% below that 5-day moving average. You know, this is kind of, again, one of those stocks that's in that range that I really like to watch at this point to see how they consolidate, when they might offer a next buy point. I mean, the earnings growth here is just incredible. More than 900% growth to $2.44 a share expected in 2012, calming down to a more reasonable 32% growth, still pretty darn good. In 2013, that would be $3.23 a share. So I like the prospects for this one. I'm going to keep watching it. I'll be right back with one last segment of today's Small Cap Roundup.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, the Tiger Technicians Hour, Monday, Wednesday, and Friday at 11 a.m. Eastern on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Time is the great equalizer of all mankind. Time doesn't care about winners or losers, who succeeds or fails. Time only cares that you played the game. Question, are you playing the money game? Is your money working as hard for you as you are for it? I'm Steve Rhodes, author of Mastering Probability, a daily trading and investment newsletter service, and we're celebrating our 1-year anniversary. In year 1, we generated a 30% profit. Plus, I provided 26 hours of live coaching to my clients. My daily newsletter service is available by 8 a.m. each day and covers the stock, futures, currency, and commodity markets, along with all the current patterns that you can trade. Each newsletter is packed with education, and it's yours for as little as $3 per day. And for the next 30 days, you can try it risk-free. Click on my name, Steve Rhodes, on the homepage of TFNN.com and begin your journey to great wealth today. If you're waiting for a better tomorrow, remember this. Today's tomorrow will soon be yesterday, and your clock is ticking. Mastering Probability. Now is your time.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, welcome back. Last segment of today's Small Cap Roundup. A lot of attention to a little bit of profit taking in Apple going on today. I'm long in Apple in one of my other longer term, larger cap portfolios. Not too alarmed by what I'm seeing in there today. Not unusual to see a little bit of profit taking after a run-up, especially one that's just been so publicized and has been so much in the news. Now, I put up a chart right there of another recent IPO, BLMN, Bloomin' Brands, and that is the company that owns Outback Steakhouse. Not terribly surprising to have seen that one finally go public, because so many of the other casual dining chains, as they're called, have been out there as publicly traded companies for quite some time already. Now, this one went public on August 8th at 11, and if I recall, that was actually below the earlier proposed range. But it finished that first day at 12.41, and of course, again, you know, you have the institutions in there supporting that. I think this was something that was in private equity. prior to going public. Let me see here. The underwriters were B of A, Merrill Lynch, Morgan Stanley, J.P. Morgan, Deutsche Bank, Goldman Sachs. Yeah, okay. So you had some of the heavy hitters out there supporting this thing that day. Not unusual to see that. Now, what we have for Bloomin' Brands as of today, trading a little over $13. So not so bad. Fairly decent debut there for this stock. I noticed that they did grow earnings pretty sharply, almost doubled in 2011. Not really seeing forecasts here for 2012, but I do notice that revenue growth, year-over-year revenue growth has been on the increase, but only in the single-digit range. So there you have it. So that's what we have there on Bloomin' Brands. Outback Steakhouse. That's one of those, it's funny. That's one of those, there's one right up the street from me. I mean, like a 2-minute drive from my house. I just don't go there. I think I've only been to an Outback Steakhouse once in my life, and it wasn't bad. I liked it. I know there's a lot of these restaurant snobs are like, oh, I've never been to an Olive Garden. I've been to Olive Garden. Yeah, it's fine. Not any kind of snobbery there on my part. Just, I don't know. Just haven't been to those very often. Maybe I should go back, check it out again. I don't know. Okay, so let's see here. Wanted to talk about, I'm going to leave the BLMN chart up there for just a moment. There's one more company that has filed for an IPO that I want to talk about here. I've got about another minute. Fleetmatics Group, and they filed yesterday. Fleet management software. I'm just always amazed when I see these. There are so many different niche markets. This is actually an Ireland-based company. There are a few Irish companies that are trading on U.S. exchanges. They plan to list on the NYSE under the symbol FM. This will be a small offering. They want to raise $100 million. They had originally filed back in May, but they're now filing again. We've got B of A, Merrill Lynch, and Barclays, who are the underwriters on this. So Fleetmatics, that's another one. A lot of interesting names in the pipeline. And they're not all social media, huh? How about that? Okay, so we've talked today about quite a few IPOs. Once again, I want to urge you to check out the IPO report on the homepage of TFNN.com. Might give you some good ideas for trades and investments down the road. And I will be back here with you again on Thursday with the next edition of the Small Cap Roundup.